Welcome back to AM. It's 20 minutes away from 9 o'clock. Last week, the Reserve Bank held the official cash rate steady at 5.5%. It's not the news that homeowners wanted to hear, but despite that, we've been seeing some interest rate drop just slightly. Here to explain and delve into the property world, thanks to our partners at Property Apprentice, as financial advisor and owner of Property Apprentice, Debbie Roberts. Thank you for joining us again. Wonderful to see you. What do people need to do at the moment in the current climate to get a yes from the bank? How many hoops do they have to jump through?
Oh my gosh, you've got to jump through so many hoops at the moment, but it's worth it, you know. So at the end of the day, what you need to provide to the banks now is a lot more than what you used to several years ago. So, you know, to get a loan approved, you've got to have both a deposit as well as provable income. So your deposit, obviously, if you're a first home buyer, you could potentially purchase a home with 95% lending. So generally speaking, for home buyers, you'd need a 20% deposit, but for some first home buyers, you only need 5%. And that includes things like KiwiSaver and all that sort of stuff. But you could have all the equity in the world, and if you don't have a job, you're not going to get a mortgage.
Really?
Yeah.
And does it have to be a high-paying job? Like, you're going to be able to service your mortgage, I'm guessing.
You do have to be able to service your mortgage. So this is the thing, banks or all lenders test your affordability at much higher interest rates than what we're currently seeing in the market at the moment. So most banks are testing your affordability across any potential mortgage that you're going to get, as well as existing mortgages that you might already have. They're testing that at up to 9% interest rates.
Because at the moment, what interest rates are, what, 7.5%?
Yes,
8%?
yeah, high sixes. Floating interest rates are a little bit ugly at around 8.5%, but yeah.
So are they only testing them to 9%? I thought it might be higher than that at the moment.
No, good Lord, nobody would get a mortgage.
Yeah.
So yeah, it is a little bit trickier to get a mortgage these days. You've got to provide a lot more information. And all of the banks crunch the numbers on your deposit amount the same way, but every single lender treats provable income differently. What you think you earn might not be what the bank will accept as provable income.
And does it depend on what job you have, what industry you're in, and if you're a contractor or if you're an employee?
Yeah, so some banks are friendlier for people that are self-employed, some banks are friendlier than others if you earn bonuses or commissions. So every bank's different, and that's one of the reasons that we always recommend working with an independent mortgage advisor, you know, someone who's got access to a wide range of lenders.
And how long are they going to be looking at your income? So what's the period in which you need to show you that income? So
if you're self-employed, you need to provide the 23 financials plus year to date with P&L, so profit and loss statements, and your IR3, yeah, that's the right one. Just had a moment. So if you're salaried, it's a lot simpler. You know, if you're an employee, then you just need the last 3 pay slips.
Right.
And do they still go
bank statement?
Do they still go through you like 3 months worth of bank statements and look at every single line and what you've been spending?
No, not so much. So you do still need to provide your bank statements, including all your credit cards and everything like that. But the banks don't look at it line by line anymore, so you are allowed to buy cappuccinos. You know, it's not going to stop you from getting a mortgage. But things that you need to avoid doing before you apply for a mortgage, avoid going into those unarranged overdrafts, you know, because that's pretty much a straight no from a bank if you've done that. Even though the bank lets you do it, it'll decline a mortgage.
Still frowns upon it.
Yeah, absolutely. So avoid those. If you've got credit cards you don't need or don't use, cancel them, because that can have a massive effect on how much you can borrow. So lots of different little things, which is what your mortgage advisor can help you with as well.
And that's for the 3 months. You know, they want 3 months worth, right?
Yeah.
So if people are wanting to go to the bank and get a loan approval for 3 months, they've got to be sensible.
Yeah, put your bank account on a diet for a few months.
Although you kind of have to be, you can't go cut back too much, right? Because it also then you're only going to be impacting yourself in terms of what you can actually afford to repay. Because if you go back to living your normal life and then you think, hang on a minute, I can't afford this anymore.
Yeah, so things like discretionary expenses, banks are a bit more flexible about that now. So if you're, you just need to think about what are the things you could potentially do without when you're applying for a mortgage. It's the discretionary expenses that even if you got into financial difficulty, you're not going to stop doing that. Those are the ones that the banks need to know about. So your mortgage advisor can help you there.
Oh, good stuff. Thank you so much for coming in. It's great to have you in the studio.
Thank you.
That is Debbie Roberts. Thanks to our partners at Property Apprentice.